Gold is the world's premier monetary and chaos hedging asset. It responds directly to financial and economic turmoil. It responds to geopolitical tensions and war. It responds to virtually any kind of uncertainty. Reasons gold is headed much higher, as we've discussed already: too much spending in the US and globally, too much money being produced, rising global inflation, a very weak US dollar, international tensions in the Middle East, explosive growth in China and in India. Gold, silver, oil, and commodities and other tangible assets tend to rise together. They're contracyclical to paper and financial assets for 2/3 of a cycle. If you're interested in digging into this, I would encourage you to find Lawrence Summers' paper, the Summers-Barsky thesis. He looks at Gibson's paradox. It's the math behind why, when stocks are doing well, gold goes nowhere. And when stocks, or what we should really say is a flat to negative real rate of return in other asset classes, gold does very, very well. People just step back from other financial assets and say, until the risk-reward relationship is fair and even, I'd rather protect rather than speculate. And that's why it's contracyclical to paper assets for 2/3 of the business cycle. Summers-Barsky thesis. And it tends to rise with rising global inflation and interest rates. Over the past 6 years, gold has risen roughly 173%, 29% annually. Silver, a little bit stronger, 266%, roughly 44% annually. Gold stocks, 300% to the upside. The S&P 500, 78%. And the dollar has dropped roughly 32%. I want to go back to the gold-Dow ratio, and then we'll look at a few of the similarities between the 1970s and now. The main thing that I want to point out, and you should observe here, is the duration of these cycles. This is stocks becoming popular and becoming more popular and becoming more popular, reaching a pinnacle in 1929, and gold having its day in the sun. There's a 32-year stretch when paper assets made sense, and a 14-year stretch where hard assets made sense. A 23-year stretch where paper assets were king, and a 14-year period where gold and tangibles made more sense. We had the greatest bull market in all of stock market history from 1980 to 1999. It made sense to be in paper assets from a sheer growth standpoint, and we're now in that same phase downward. We're about 6 to 7 years in. The paths have been between 10 and 20 years in total length. I think a 14-year estimate is pretty conservative in terms of a massive bull market in the precious metals.